Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to talk about the current stock market situation and what is going on. We see that over the last month, basically the Nasdaq hasn't reached all-time high again, and we have basically this situation where the stock goes 2% one day and then minus 2% the other day. And I see a lot of articles and videos around trying to find an explanation to that. Okay, so it's the inflation or it's the 10 years treasury bond, all this kind of stuff. And in today's video, guys, I want to explain why, in my opinion, the stock market has changed and what that implies for basically investing from now on in the future. The only thing I ask you is please leave me another like, it's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. So guys, here we go, the Nasdaq, as we can see from February the 16th, it done all-time high, and then now we are still below those levels, and this is something that it's kind of new because over basically the last year, going on from the bottom of the pandemic, stocks only went up. Okay, so that's something not familiar if you are just a new investors that you joined the market after the virus hit. Okay, so then we have seen the S&P 500, which is still kind of doing well as the Dow Jones, which is actually very near all-time high, and this is due to a shift from tech to value stocks, recovery stocks. As I explained you in my previous video, the main reason for that is actually the reopening of the economy and then the 10 years treasury yield going higher. Okay, so overall the market kind of shifted from tech to value because if you have the yield going higher, you kind of prefer those kind of companies that they are actually making money today, okay, and not in 10 years time, simply because of a discounted rate which tends to appreciate more the cash today than the cash in 10 years. For example, if the market fears inflation, this is exactly what is going to happen. Anyway, there are many explanations to that, different philosophies. For example, we have seen Cathy Wood saying that this is just temporary. Overall, the inflation in the long term will not exist. Tech will continue to pop. Then we have seen another idea, which I have actually brought to the channel, Ray Dalio's idea. Ray Dalio's idea is that the bonds, so the bond market is in a huge bubble, 40 years uptrend, and now it's time that people realize that bonds are not an investment anymore. They are stupid, as it calls in this LinkedIn's letter, that actually we could see capitals actually exiting the bond market and then for the rate to actually continue to spike up. And as always, Dalius is a macro investor, is always kind of catastrophic, okay, in his views. And if you go to see that video where I explain everything what he said in the letter, I actually agree with him somehow in the long term. I mean, this kind of printing as much as possible without any problems, actually, it is something that can be unsustainable and obviously cannot go on forever. However, as I say at the end of the video, the main problem with these huge macro views is that, okay, in the history, that is what has already happened, but we don't know the exact timing of that. We don't know whether this will actually happen in 10 years, 20, 30, 40, 50 years, okay? So, and then in a previous video I did, I gave you my personal idea about the interest yield. Obviously, I'm not Ray Dalio, I'm just a random guy on YouTube. But my idea is pretty simple over there, is that differently from what articles and stuff are actually putting fear on this kind of interest yield going higher, because obviously we know that fear is a lot of clickbait. So if you put out fear, you are gonna get views, so you're gonna make money. But anyway, In my opinion, this strange event, as I explained to you, is not the yield to going higher at this point, but the strange event is this one, okay, the pandemic event. And then if you take a look at basically the last 10, 11 years, you have the 10 years treasury bond, which has always been in this green square, which I drew you, which I call the normal range. Okay, so from 150 to 250, and you can stretch it until basically 3. As the economy reopens, the market goes away from this strange event and it actually comes back to our normal level. So why I do think that the stock market has changed? Simple enough. During the last year, from the bottom of the pandemic to now, to where we are actually, to where we was 1 month ago, the Nasdaq has done 103%. This has been the biggest bull run in the history of the stock market, okay, if you take that time range of 11, 12 months. Now, the problem is that all of that actually gave investors, and especially new investors, because if you, before the virus, you didn't know what the stock market was and you started to become interested in it, because of the virus and the pandemic, actually you have in mind this kind of performance. Okay, so a lot of people, a lot of new investors have in mind after the last 12 months is that stocks, they just go like that. Okay, and that's what they do, straight up, and that's it. But the reality is pretty different. So if it's not your first year in the stock market, and if you have actually studied the stock market, you know that, okay? But if you're new, well, those are the average stock market returns. And we can see that now this is 1 year, 15 years is the year over year, okay? And while that one is from December to December, I think. Anyway, we can see that on average, for the Dow Jones, for example, we have a 10 years average of 10.68, a 15 years average of 6.67, and the Nasdaq, which is tech, okay, we like tech, but on average, the Nasdaq has done 14.39% and 10.19% in 15 years. Now, you understand that 100% in basically 12 months is something extraordinary. You cannot expect that to continue forever. And in terms of statistics, you have that once you have a 1 year, which is so crazy, it could be that the next couple of years actually returns are gonna be way lower than that. Probably even negative. The stock market is a long-term compounder, okay? And it's not that all the years you're gonna see 100%. From March 2020 to now, we have beat that, okay? So just to make you understand how the 2020 period is something extraordinary, is something historical. It's not the normality. And that's why I'm telling you that the stock market has changed. In my opinion, we are moving from something extraordinary to a coming back to normal level. As we can see in the past, this is from Market Watch, is a research that they have done on hedge funds and the S&P. Over basically since the 09 to 2018, so 9-10 years time frame. The blue one are hedge funds, the green one is the S&P, and you can see how on average all the hedge funds, so if you take the average returns of the hedge funds in the US, they have always lost against the market. Okay, so that should make you understand how difficult it is to actually beat the market. So why am I telling you that? Simply because over the last 6 months, in my opinion, we have gone through something that it was unsustainable. If you follow my channel, you know that I love fundamental analysis. I always do fundamental analysis before buying stocks. And I think that that's the only way on the long term to have an idea, if you like, investing, okay, in companies. But over the last 5-6 months, actually, fundamental analysis, a lot of people were saying that it doesn't work anymore. Now, when you hear this kind of stuff, you realize how it is the current situation, okay? How it was the situation up until basically 1 month ago. It was simply unsustainable. I have made a lot of video basically warning people about that. But you know what? YouTube was full back then of hype channels. And basically, that's all about what people wanted to hear, okay? Selling the dreams, making thousands and thousands of money, becoming millionaire in just 1 week. But that's not how it works. So I have been warning many times about different stocks, hype stocks. An example was Virgin Galactic, when it was around $60 per share. One of my biggest warnings has been Nikola Motors. Another one very common between investors was Workhorse. Okay, Workhorse now is around $13. It was around 40 back then, actually not a long time ago, just 1 month ago. But the reality, guys, is that if you did fundamental analysis on those stocks, it is not strange to see them back at these prices. So in my opinion, what you should do now, what is the strategy? The strategy is pretty simple. Remember, fundamental analysis is the key in investing, okay? And don't believe anyone who's telling you that it doesn't work anymore. It cannot work, yes, for 5-6 months, probably, as we have just seen. But then, in the long term, where are all those stocks? Now we're back down, okay? 40, 50, 60, 70% drop in prices. And then people are asking why. Well, no, people should ask why they were at those high prices before. So that's the main question. My biggest suggestion is to forget what has happened in 2020. Just erase it from your mind. You cannot be actually stuck to that idea that stocks, they just go higher 10% every single day. It's not how it works. And in my opinion, what I will do is to focus, as I have always done, a huge part of my portfolio into businesses that they are actually making money. Businesses that they are efficient, that they have a nice growth ahead, low debt levels, and are actually positive in cash flows. So do some analysis, trying to inform yourself, okay? Go on, read something. I have done videos about how to make free cash flows and all this kind of stuff. In my opinion, if you really like the stock market, this is what you should do from now on. And don't be fooled about seeing actually prices of hype stocks now down 70% and believe that now they are cheap. Because in my opinion, 90% of all these stocks, hype stocks before, all this biotech stuff, all these kind of very strange businesses that we don't even understand what they are doing, in my opinion, they will never go back to where they was, okay? If you don't believe it, just go on and try to see all the companies of the tech bubble and actually go back and look how many of them have actually reached again the price levels that they reached in the year 2000s, okay? A lot of them just went out of business. So just focus on the fundamentals. Then, if you have a percentage of your portfolio where you like to be more speculative and invest in future stocks that you believe in, that's perfectly fine. You know that if you follow the channel, I like Palantir. I have opened a position on it. Even though that's a long-term play, I have shown you the bull case some days ago, but in order for that to happen, Palantir has still to do everything. Okay, so this is just a possibility, something that I like. I think it can happen, but it's not the reality today. Okay, so if you just look at the price today, it can get lower. Another stock that I like, and I told you that I've invested in it, more speculative, is Vuzix. Okay, the smart glasses player is a $1.4 billion company, and the valuation today doesn't make any sense, but I completely understand that. And in my opinion, it is fine to actually try to do that with a small percentage of your portfolio. But overall, from now on, going on in the future, I think that the stock market is changed, and you will not see all the types of companies going higher in prices, okay? Because as of now, all that you needed was a good sales pitch, okay? So good marketing, trying to sell the dreams, and then those stock prices, they were actually exploding. But this is not how it works. So if you like investing, my idea is that you should actually focus from now on, okay, if you haven't started yet, on fundamentals. That's the key. And that's actually has always been my strategy and will continue to be my strategy. Once you have an idea on the valuation of a business, then you can actually understand if the price is cheap or not. Should you invest in value stocks like airlines, like casinos, and all this kind of stuff? Well, in my opinion, money have already been made there. Okay, what I mean by that, I don't know if you're one of my first followers. I was talking about buying airlines and buying MGM especially back in April. But now those stocks, they went up 3x. For example, MGM 4x. Okay, so is they are now still a bargain? In my opinion, absolutely not. Those companies are full of debt. Actually, if the rate continue to go higher, it will be a problem for them as well. So even this value stuff, be careful, okay? You can end up in troubles, okay, in traps. That doesn't make sense. In my opinion, all you should do is follow the market, try to understand companies, try to understand the fair value of it, and then see if the market offers you an opportunity for long term. And obviously, forget about what has happened in 2020, because it will not happen again in 2021, 2022, okay? Everyone is a genius in a bull market, but I think that now the market has come back to normality. I hope you find the video interesting, guys. Leave me a like, leave me down a comment with your opinion, subscribe to the channel, and as always, guys, have a wonderful day.